This is the Rich Dad StockCast with Andy Tanner, the show that kicks 401ks in the asphalt and teaches you to be the master of your own stock investing domain. And here's your host, Greg Arthur.
Hey, welcome to the StockCast. This show is going to be exactly like every other show. I'm totally kidding. It's just that every show I say it's going to be totally different. So this show, we're going to discuss ETFs, and we're also going to discuss the conspiracy around ETFs, which I'm pretty curious about, a couple different kinds of ETFs, and you're going to be shocked at the purpose of an ETF because it makes no sense. So with that, let's bring in Andy Tanner, who is our ETF expert. In fact, sorry, Andy, but he's actually making for his academy course, his cash flow academy course. He's actually in the process of making an ETF course. So in the show notes, if you want to sign up for Andy's stuff, and he'll let you know when his ETF course is ready. But so Andy actually knows about these things. So Andy Tanner, thank you for joining the show. Let's hear about ETFs.
Well, thank you very much. Do they make sense? Do they not make sense? I don't know. I hate to be called an expert on anything because I'm wrong so much. Being an expert denotes you know what you're doing, and I'm a student trying to learn. But I do know a little bit about ETFs, and I'm happy to share. I would say, there's always a big picture lesson, and you and I hammer on this, and I think it's required to hammer on it because it's so prevalent to try to destroy is the advice culture. Most people, when they decide, I'm going to be an investor, and they read Rich Dad, Poor Dad, and they say, I'm going to buy assets, they go to in advice mode. And their question is, what should I buy, not who should I become? It isn't about the personal development of becoming an investor. Just tell me what to buy. And so ETFs gets in that list of someone's going to say, well, buy ETFs. And then we fall into a real ignorance trap. And just see, when I say this phrase, just see if this resonates with listeners as I say this. It's probably risky to invest in things that we don't understand. There's probably risk in investing in things we don't understand. So someone can take advice and say, I got my money in ETFs. And then if I begin to ask them what an ETF is and how they work, and what's contango, what's super contango, what's backwardation, I start throwing all those jargon at them, and their face goes blank. Well, maybe you got advice, but you're still investing in something that you don't understand.
So this is something Robert taught me too. Robert actually he had this phenomenal, huge real estate deal presented to him, and he studied it for like 2 days, and it looked amazing. It looked like all this profit, all this, and he didn't do it. He passed on it, and I was like, why the hell didn't you do that? And he just said, Greg, I didn't understand it. There were parts of that deal I didn't understand, and I do not invest in things I don't understand. And I was just like he's a real estate expert, right?
Yeah.
And he didn't even understand it. So,
but his is the right context. His is one of education rather than advice. He gets advice all the freaking time.
Yeah.
I mean, people are always giving him advice, and
I tell him what to learn.
Is not the issue for him. The issue is, do I understand this? And do I want to understand? There's stuff that, Robert is an insatiable learner. He wants to learn every day, but that doesn't mean he wants to learn everything about anything. He's very specific in what he wants to learn about.
Yeah.
And there's other topics that come out. He says, I don't want to learn that. It's not my thing. Not interested. Have no passion. And that's okay. Same for me.
Well, hopefully everybody has a little passion about ETFs, but I think before they can get that, you should probably tell us what that stands for.
So ETF stands for Exchange Traded Fund. I can't remember when the first one was brought out. I want to say 90s, maybe 80s. Don't hold me to that. I have it written down somewhere in my study and notes.
But Eddie, hold on. Exchange Traded Fund. Everything's exchange traded, right?
Yeah, I mean, it's funny, you can call things money, currency, they goes by a lot of different names. But yeah, it's a fund that's traded. So what's the difference between an exchange traded fund and a mutual fund? Well, let's take the word fund. A fund is an amount of money, right? I have a retirement fund. It's a place where I have assets in my IRA fund or my 401k fund, or we have the school board fund or the scholarship fund. It's a resource and a place where money's kept, and that can be individual. Well, a mutual fund denotes a bunch of people that it's spread around between a lot of different assets and a lot of different people. So it's kind of a cooperative, you might say. And so the jargon is, yeah, are they traded? Yeah. So the word ETF is just to understand, okay, this is a fund, and what the goals of morph. So this is where it gets a little sticky. But let me just, if we want to keep it simple,
Yeah,
we would not be wrong. We would not be entirely wrong to say the goal of the goal of many ETFs. I won't say all of them because they'd morph, but if people say one common goal of an ETF, there I'm getting it pretty close, would be to mimic or track something else. In other words, mirror their price. And people say, well, these don't make sense. Well, actually, they might. I'll give you an example. Do I own some ETFs? Yeah, I do. I actually do use some ETFs. For example, I have purchased physical gold, and that has a purpose for me. I also have the GLD ETF, and that has a purpose for me, but they're entirely different purposes. I've purchased Bitcoin in the past, but I also have a small stake in the Grayscale Bitcoin Trust, which is an exchange trade fund that tracks Bitcoin.
okay.
And so I have exposure to Bitcoin, but I'm also investing in that for different reasons than I do the actual real Bitcoin.
Okay, before we get too deep into that, you have me a little puzzled. You said the fund's purpose is to track. Like, so if
Yes,
gold's going up and down in price, the fund goes up and down in
that's
price.
right.
Whereas
Right.
most things in the stock market, the goal is to just keep increasing, but that is not the goal with an ETF, correct?
That's right. And the reason is you have, that one of my favorite investors, I disagree with a lot of what he says, but I agree with a lot of what he said too, was a guy named John Bogle. Sometimes they call him Jack Bogle, but his real name is John C. Bogle. And he was the founder of Vanguard, which is probably the second, them and Fidelity battle it out for the biggest guys on the block. And John Bogle was different than Buffett. He disagreed with Buffett. Buffett says do a fundamental analysis and find a really good handful of companies, invest in them, and keep with them as a business owner unless the business sucks. Don't trade them. Just look at it from a business owner standpoint. If the business sucks, he didn't like the airline, so he sold them. He wasn't trading, he was selling, buying and selling businesses rather than trading stocks. There's a difference in the mindset. John Bogle says, and he's right, he says the amount of people that have demonstrated the commitment, that have demonstrated they want advice. Most people will not educate themselves to do fundamentals. Most people don't even know what it is. And so he says, for those people, it's vast majority, it's just better to buy everything, diversify, and let the market go where it may. And so he developed a mutual fund, or at least Vanguard did, called the Vanguard 500, which was really just the S&P 500. So here you have a mutual fund that goes out and it buys whatever the S&P 500 is. And so it's going to be lockstep, and they call that an index fund. It's indexed to be lockstep with the S&P 500. And so its goal was not to beat the S&P with active management by charging exorbitant fees. The justification is if it's an actively managed mutual fund where we're trying to pick the best ones like a Buffett would, we're going to charge a lot of fees for that. But if we're just buying the S&P 500, how much talent does it take to do whatever the S&P is going to do? Zero. So the fees are very, very small, but you're just going to be average. You're going to, if the S&P does well, you do well. If the S&P sucks, it sucks. And it's for a person that believes in the long term that'll do well. So as these type of index mutual funds, gain popularity, they morphed into exchange traded funds. There's some popular ones. I mentioned the GLD. It is an exchange traded fund that will mimic. It's about I want to say it's about 1/10 of an ounce of gold. You have, the dollar. UUP is a thing that will mimic dollar relative to other currencies. You have the SPY, which is much like the Vanguard 500 mutual fund. It will mimic, but it's 1/10 of the S&P 500. And so where this gets a little interesting and a little sticky is it poses some questions that might make our head hurt a little bit. It's like, okay, once a company goes public, there can be a detachment from that underlying company, right? Because now we have shares out there floating around, literally called the float, floating around, and it's an auction. So Tesla, even though their fundamentals might not be great, it could go to the moon. Or like GameStop, detached from fundamentals, went to the moon and crashed back down again. So since the stock market, and once you issue shares, it's supply and demand, it's the limited amount of the shares as opposed to what it represents. Well, stocks can go to the roof. So how do you create shares of an ETF? What if everyone buys it? Wouldn't it detach from gold and go up? Or what if everyone sells it? Wouldn't it detach to gold and be less valuable?
Okay, wait, I just want to make sure I'm understanding detached.
Makes your head hurt.
Yeah, a little bit. So detached means the stocks don't represent how well the company's financially doing.
That's right. They like, for example, GameStop at $400 a share. Think about this. If you took the fundamentals of GameStop and you sold all their assets, you'd wind up with about $2.4 billion. If you then took that $2.4 billion and paid off all their liabilities, you'd have about 400 million left. So basically, in a way, you could say that's one valuation of GameStop. How valuable is that company? Well, if you shut it down today and sold everything, you'd have 400 million. Okay, now contrast that with a $400 share price with however many billion shares in their float. I think it got up to $29 billion market cap. So if you took the stock and sold it all off, you'd have $29 billion. But if you took the actual company's assets and sold it off, you had 400 million. 29 billion to 400 million, that's quite a disparity, right?
Yeah,
so
right.
Stocks can detach from the balance sheet, can detach from the underlying thing they represent in terms of value often, because it's the supply and demand for the stock that drives it, not profits for the company. It's still worth 29 billion, still worth it. It's just the underlying company isn't worth it. The stock apparently was because they wanted it.
But that's not how ETFs work. ETFs,
they're going to try to stay in lockstep. Yeah, exactly. So if there were a buying run on the GLD, right? What keeps it what would keep it at 100? Let's say it's
gold. The GLD is gold.
Gold is 1,600 an ounce, whatever it is. And let's say the ETF wants to be 1/10 of that. It wants to maintain 1/10 of it. So if gold goes to 2,000 an ounce, it'd go to 200. If gold went to $1,000 an ounce, it'd go to 100, right? It's 1/10. How does it stay in lockstep what if everyone sold their gold and bought the ETF? What if everyone sold their stocks and their real estate and their business and bought the ETF? How does it maintain that? So they have to do a lot of different things we won't get into here. If you want to learn about it, we'll build a class on it. But they have to manipulate these in a lot of ways to keep that lockstep. And some of them are successful and some of them are not successful in maintaining that lockstep. There's an ETF that tracks the VIX, the fear index. I think it might be the worst investment on planet Earth because it trades based on futures in something called contango. It's complicated stuff, but it'll be zero someday. I mean, it's got a half-life to it. If you look at its chart over time, it just hasn't been able to mimic the VIX at all.
Right.
And there's problems with it. So that's one thing. Another thing is, go ahead.
Well, I don't want to get too deep into this, but I did mention the conspiracy at the beginning of the show.
Yeah.
And I know there's some ETFs that actually they actually have, for example, gold or silver. They actually have the physical gold and silver in some vault somewhere, and so it's real. Like that ETF is actually truly representing gold, silver. But then the oil ETF, that's not the case. Is this correct? So my conspiracy is there is or isn't gold in the vault.
Let me give my politically neutralized, not get in trouble, banned from Twitter answer on conspiracies. I have a lot of friends who are conspiracy theorists, and I have a lot of people who are not. The way I look at it is I in my life, one of the quotes that I used to have up on my wall, I'm getting it made bigger. So they're sitting there in the corner till I get around to making them bigger. But one of the ones that I love, it's that big long one back there. It's the one that goes on the top, and it's from Steve Jobs. And it's my favorite quote in my office, more than Buffett, more than Munger. It was from a non-stock guy, Jobs. And it says this, it says, basically that your life is short. So don't waste your life, listen to other people. And then it says this, very important. It says, don't be trapped by dogma, which is the result of living with other people's thinking. Have the courage to follow your own intuition, right? So what is dogma? Dogma is when someone that we give authority to says, this is how it is, and we just believe it. And I won't be trapped by dogma. So let me give you an example. There are many people, when you talk about conspiracy, that say we did not land on the moon. And they say, Andy, what do you think? And I say, well, to tell you the truth, I truly don't really know. I've never been there. I've seen videos, but those can be manipulated, whatever. But my personal feeling is I have a very high level of confidence that we landed on the moon. I'm teaching my kids that we did land on the moon. But there are many people that believe the earth is flat, right? The flat earthers in the millions. And so conspiracies are interesting psychology because they allow us to be a victim, because usually there's an evil force trying to fool us. So it allows us to become a victim when we believe in conspiracy. And it gives us a sense of, well, I'm smarter than everybody else. Everyone else is buying into the computers, but see, I'm smarter. Bigfoot. I have a very low level of confidence that Bigfoot exists. And so when I talk about conspiracies, I really admit that I don't know anything 100% for sure, because I won't be trapped by dogma. I'm always going to be willing to be wrong. And people that are dogmatic refuse to be wrong. They say, this is how it is. I'll give you an example. One person might say, look, gold is money. End of story. That's it. And in 1971, the dollar stopped being money because it's no longer gold. Person could equally say this. Actually, gold is not money. It wasn't money when we used tally sticks. It wasn't money when we used seashells. And in 1971, actually, gold stopped being money and credit became money. And if a person doesn't recognize that, they're not going to have any of it. Because gold in our world doesn't do much other than make a watch now. Businesses are far better serving you. I'd rather have Apple than gold. Apple produces stuff, right? So conspiracy theories, it's your level of confidence. So with that big, long disclaimer, here's the idea. If a person is a gold bug, like my grandfather was and like I am, they're very tempted to become attached to that dogma and say, gold is it. It's everything. There's nothing more to learn about it. There is never going to change. Gold is the standard. That's the way the world is. It's much like a Christian. Jesus is it. Muslim, well, Muhammad is it. And they're not open to discussion. Hindus, or Buddhists. Buddha is it, right? They're not open to any other ideas. They have their truth. So a lot of the gold guys, especially particularly those that sell gold dealers in specific, say the gold ETF is trash. It's worth nothing. It's printed on paper. It's garbage. There's no value to it. It can't help you. If you don't have physical gold and you buy the ETF, you're a complete idiot and a moron. Well, I guess I am, but the problem is I have both. Why would I have both? Why would I say, no, I don't believe that. I think there's some validity to the GLD. So what they say is well, it's not backed by gold. And I say, well, why do you collect rent then? They go, what do you mean? Well, isn't a dollar a piece of paper? Why wouldn't you demand gold from your tenant? Because the dollar isn't backed by gold. We know that for sure. The ETF claims to be. Now, whether it is or not, we'll discuss that. But we know the dollar isn't. So why don't you collect gold from your tenant? No, we like cash flow. We like dollars coming in because they're useful and we can buy, Ferraris or, cool clothes or whatever we want, freedom, we can buy with it. So the idea is that it's not, that the GLD ETF is not backed by gold and that it does this. So Bob Dasani and will a conspiracy theorist change their mind?
I doubt
If I bring back a moon rock, or I take a picture of a round Earth, is a flat Earth guy going to say it's round? No, they're not. They've already decided they're dogmatic. They can't learn. The more dogmatic you are, it's like Job said, you're trapped by dogma. You can't learn. So Bob Dasani, I think it was, from CNBC, heard that this, there's no gold behind the GLT ETF and all this. So they go to the powers that be and they say, all right, they put him in a van and they take him to London where they store the gold. And it looks like Fort Knox, and they go in there and he's in there with the camera saying, here's the gold, here it is. And the conspiracy says, no, that's fake gold. It's painted lead, or, these serial numbers, if you magnify it huge, they don't match with this serial number here, and, whatever. So my feeling is I have a high level of confidence, much like I believed we landed on the moon, but I can't prove it. I don't know for sure. I have a high level of confidence that ETF is backed by gold. Now, where the gold dealers are correct in my view is you can't cash that in for gold. They have things called baskets. The same with the SLV with silver. They're called baskets. And if you have a ton of it, a basket, I don't remember how many ounces it is. It might be like 50,000 ounces or something. Then you can actually trade it for, but most people are not that large. They don't have 50,000 ounces of gold. So they increase and decrease that gold supply in lockstep with the shares that are traded and the amount of float they expand or shrink of shares available at ETF. And they've kept that thing balanced for a long, long time.
So they buy and sell the gold, the physical gold, in order to stay in
they do.
sync with, wow.
And they've done a great job. And so it is backed. So it's kind of like owning a stock in that, I have some shares of Apple, but I'm not running the show. And I can't waltz into Apple and start saying, hey, write me, give me the checkbook. Let me start writing checks because I'm the owner of the company. Shouldn't I be able to write the checks around here? And I want to, the way it's like Kenny, if I invest in one of Kenny's real estate projects, I don't have any power to do anything there. Kenny has the power. He gets to decide. Like let's say I invested in one of Kenny's real estate investments. I actually can't tell him, look, I own this percent of these houses. I want to move in. I want to kick the rent out and move in because they're mine. Or I want to sell these because they're mine. And it's my investment is backed by real estate and I want to cash it in. You can't do that. Kenny controls it. Well, the gold ETF's the same way. You're invested in it. Your money went to purchase it, but you don't control it, which is a difference that is valid of having. If someone says that GLD and gold are the same thing, they couldn't be more wrong. They couldn't be more wrong. The dogmatists, though, say that, well, this one's evil and this one's good, and you should never have an ETF. That's not true. I will make more money on gold having the ETF than the guy holding the gold will, because what I get to do is I get to sell a put and get paid to buy it. I get to sell covered calls. Every month I have puts on the GLD.
Okay,
there's a price every month. Every month there's a price that I'm willing to pay for gold that's clear down here. And I get paid for being willing to buy that cheap. I don't get that with physical. So I'm getting cash flow every freaking month that adds up. So as I get that cash flow from being willing to buy gold low, and it never gets that low, when it finally does, not only am I going to pick up a ton of gold cheap, but I get to take all that money that I made month after month, cash flow, all the money I made, and that offsets even the low price. So I'm getting it even lower.
Okay, wait, this is common sense to you, but this is something I didn't know. I did not know you could use options on ETFs.
Not all of them. The one that the ETF that I hate the most that I own is called the Grayscale Bitcoin Trust, the GBTC, and it tracks Bitcoin, and it's still traded on the over the counter. It's traded on the OTC, over the counter. It's not traded at the NASDAQ or the New York or the American Stock Exchange. Okay. It's OTC. And the thing I hate most about it is I can't do that. It's not optional. Okay. But, I bought that. I think it's probably today around 37. I don't know what it is. $40,000, whatever it is. I think I bought my first shares at like 17. Okay. That's huge because let's say it goes to $100,000, Bitcoin does. Well, if I have hundreds and hundreds or thousands of shares of this GTPC, and it does become optional someday. When I begin to write calls out of the money on that, my ROI is fantastic, because I'm writing calls at strikes that are huge with big money, where my original investment, the first share is about where it's 17. So that's a bit of a speculation on my part. So I like that exposure. And the other thing that's awesome about the GLD is I can buy puts on that, and I can go beyond what I own there and actually protect my gold investment from dropping, because every bit that drops, I get paid to watch my gold drop, and I get to keep my physical gold as well. So there's some cool reasons. Now, a gold dealer, and I have great friends that are gold dealers, like the guy who'd come and say, no, Andy's wrong. Like Mike Maloney would say, no, Andy, we're good friends, but you're wrong. And Anthem Blanchard say, no, go store it in my vault. But it was funny with Anthem. He's a great guy, and his wife has a beautiful voice. And I was on a cruise with him once, and I said, hey, Anthem, how much money should I put in gold? He goes, all of it. Put all your money in gold. I don't know if he said that, but he said a lot of it. And I go, what if it's like $10 million and I don't want to store it at my house because I don't have a full-time army to defend it in a vault? He goes, well, that's my business. I hold the gold for you in my vault. And I go, well, if I want my gold, how do I know that it's mine? He goes, well, I give you a receipt that shows you that you have this gold. I go, what's that printed on? And he looked at me and says, you suck, dude. So they're right in that you would absolutely, why would I have both? If I thought the ETF was the end all be all, why would I own physical gold in a vault somewhere, right? Why would I do that? Because I know there's realities that I can control that gold. I can actually get it in my hand. And if the world went to hell in a handbasket, that's where I would turn probably more than my ETF. But my ETF cash flows, my ETF is optionable. My gold ETF allows me to trade in the markets, and it's a different purpose. I still get some hedging with it, but I have both. Now, here's the other thing though. Not all ETFs are like that. Like silver, the SLV is also backed by physical silver, and people are going to say, no, it isn't. Well, if that's the conspiracy, then that's well, I really don't know if it's really backed all that. Well, I don't know that we landed on the moon either, and I don't know the Bigfoot's fault. So you may be right. Maybe someone comes up with a Bigfoot someday and says, Andy, see, you were wrong. And as soon as they show it to me, I says, yeah, I was wrong. I sucked. I should have been a Bigfoot hunter. And if they say we didn't land on the moon, I'll say, I'll be darned, I got duped, because I've been duped in my life majorly, by dogmas before. So they may be right. I'm not claiming to be right. I'm just saying, if you want my opinion, I have a high level of confidence that when, I think it was Bob Desandi or one of them, I can't remember who it was, CNBC is holding the gold in the vault. Did they stage all that? Could have. Right. I don't think they did. Here's where it gets tricky. Oil.
Oh, wait. We only got 5 minutes left.
Okay.
So let's do oil on the next show.
You really want to do oil? I can do it in 1 minute.
All right, do it in 1 minute. But wait, before we do,
oil isn't backed. It's backed by futures. They never take delivery of it. And as a result, it trades in something called contango, and it's a mess. It's scary, especially if you think gold goes negative or oil goes negative, because they don't take delivery, because it'll spoil. It's like milk. Right. And that adds a whole layer of complexity on trying to keep that in line. That's it.
But it still tries to mirror the physical gold.
What?
It's still trying to mirror the physical gold. I'm sorry, the physical oil.
It's trying to, but it's not good at it.
Because it's a perishable product, which creates a whole.
That's right. They have no interest in taking ownership of it, because they have nowhere to put it. They have nowhere to refine it. It's not a game they want to play. Gold doesn't spoil. You can hold it. Right. Silver doesn't spoil. You can hold it. Oil and corn, soybeans, all those ETFs, dollars you can hold. But a lot of commodities are perishable. You have, stuff like lumber that lasts a little while, but oil, milk is nasty. And so there's those. Now, there's also the really bad, there's fraud everywhere. There's fraud in ETFs, and there's really non-fraud ETFs that just suck. Let me give you an example of a non-fraud ETF that would have sucked. I don't think Robert would be bothered if I shared this story. Is Robert gets pitched all the time for everything. He knows that the power of his brand is powerful, and people follow him because he's been good to them. Robert has given good education to people, and they trust him. Well, people know this, and so they want to, they come in with their fangs showing. And a few years ago, I don't think Robert would care if I shared this story. He never told me not to, so I guess it's okay. He had a bunch of guys pitch him, says, let's do a rich dad ETF. You'll make millions. You remember this?
That was part of it.
Yeah. And
Yeah,
so
I actually introduced Robert
you'll
to
make
that guy.
millions. You'll make millions of dollars because you're Robert Kiyosaki. You announce this, everyone will buy it because you're you.
Yep.
And off we go. And Robert says, well, what would it track? He goes, oh, we don't care, whatever you want. Andy's your paper-less advisor. Just have him get a basket of stocks like a mutual fund. We'll use his methods, and off we go. So Robert calls me. He says, hey, we talked to these guys. And so I got him on the phone, and I could just smell. They just wanted to, you make a lot of money when you come up with a list of stocks and mutual funds and sell them to people. It's an instant windfall of millions of dollars. And I said, so what strategy do you want to use to track? We're going to call this ETF a strategy that we do certain things. I use time decay. Off we go. And he says, well, we'll back test it. And I go, how do you know it won't fail? How do you know my system won't fail? How do you know that people won't put money into this and I do this and I screw up and it fails? How do you know that with such confidence? You don't even know me. They go, oh, we'll back test your stuff. We'll put it in the computer and see how well it would done over time and show them. And the thing they didn't realize is, there was a time where no one could run a 4-minute mile, right? There was a time where no one could jump over 7 feet high. And, once you break the 4-minute mile, it goes lower and lower. There was a time where no one could win more than 1 or 3 championships, right? Records are made to be broken. There's always someone younger, faster, and there's always a market change that's the future's way different than the past. And I basically said, guys, if you want to do it with Robert, fine, but I'm not going to be involved. And Robert said, I'm not being involved either. And they kind of went along their way. But so there's stuff like that goes on where guys just want to get an ETF for the sake of getting an ETF, raise a bunch of capital with a good name, and then you're left with this investment that does what? It's advice.
I was just going to say, that's the same thing. Robert would never do that because he wouldn't understand it.
Exactly. And he asked me to explain to him. He says, I don't think you really want to learn it anyway. And I said, I wouldn't do it, so I don't know if I don't think he would have done it either way, even without my input, because these guys, you could just tell. Just tell. They were just.
Well, Andy, we're out of time, but I do want to point out a couple of things that I learned. I thought ETFs were only for speculative trading, and you just taught me that on some ETFs you can option and cash flow.
It's huge. Yeah, it's a big deal.
And I was really
hedges. They're useful. The problem is it's a lot like when Robert says, well, don't buy any mutual funds, ETFs, and what diversify. He's right, but what he's talking about are people that just buy and hold them like a 401k type guy. That same mentality. If a person understands the options market, well, that's totally different than what Robert's talking about.
Right,
totally
right.
Different. So,
the other thing of value here is that some ETFs, definitely not all, do actually have commodities backing them, physical.
If you have a high level of confidence,
chances are, and some don't because they can't, like oil,
right?
Or you think
they trade in contango and backwardation because they have a future, which is a claim on it. They never actually do. They just have a claim on it, and they're hoping that claim will be valuable and they can sell it in what they call rolling out to the next month. Well, when oil went negative and no one could take delivery because all the tanks were full.
Right.
OPEC was producing and the ETF was like, we're not equipped to take delivery of this. We've made all these promises. We got to roll them out, and they couldn't do it. And so the USO, United States Oil ETF, I had people buying it like crazy because it was so cheap. I says, be careful.
Right.
Because it'll come back someday, but be careful in the short term if you're doing options on it, because it's in what we call super contango. And again, people investing in things that they don't know.
Right. And my final thing here is you can use ETFs in some situations like gold again to actually insure your physical gold, which I find a fascinating concept.
Yeah, and your physical gold you get to keep. So let's say that I think gold might struggle because Bitcoin's pulling some people out of it for a while, but I think long term gold will come back because I'm a gold bug. Well, great, keep your gold, buy a couple of puts, and spend a little money on insurance.
Right.
And then if that gold drops in price, that ETF explodes in value, cash it out. You've still got your gold. You can even buy more physical and let it go up. You can do that stuff if you want to speculate and all
That's
that type
awesome.
of thing.
Well, obviously, it's a super complex topic, and like I said, you are creating a course. Listeners, I
Don't ask me when it'll be done, though.
No worries.
Now we're talking about something that's not backed by anything that's physically complete. We can definitely say that's vaporware, but we are
there is definitely some free training in the show notes. So
that's we have yes.
All right.
Yes.
So Andy, thanks once again. I learned a lot of things I had confused about, and you cleared it up.
Great show, a lot of fun. I hope people hope their head doesn't hurt, and if so, give us a question. We'll do a show and follow up.
All right, cool. Appreciate you, Andy.
All right.
Bye.